There's two other things I want to mention as we were talking about financial statements before we kind of drill into on a per product basis, which I think is also very important. One of the things is to calculate seller's discretionary earnings. And I'm going to do that, you would take net income plus interest expense plus depreciation, amortization, and there are resources out there that can help you calculate this. Uh, but it essentially gets to a good proxy for cash flow. If you have any personal expenses or a company vehicle, you would deduct that out of, or you would add that back to net income. But what this does is it gets you to an approximation for the value of your company. So you would take this number, you'd multiply it. If you're running an e-commerce company, probably somewhere between 2 and 4 these days. That does change. And then you'd add on inventory. And that gives you an approximation for what could I sell this for. And the reason I mention this is it is helpful to know how much is this asset worth that I'm building. However, I would also add from just a mindset. When you're growing, say if you're growing 100% year over year, most people that haven't run a business would say, oh, you must be cash flow rich. And I can tell you, as somebody that has grown businesses 100% year over year, you will never feel so poor because your cash conversion cycle is very long. You cannot run out of stock. And you place your order. You may not have recouped all of those profits yet to go and make your reorder, especially if you're going out of China. And it is, when you're sitting there cash flow poor, it's kind of helpful to know that, well, at least I'm growing this asset that's worth something. And I like to look at that number. And from like a mental health standpoint, it's been really helpful to look at that every month. And it's also helpful to see, okay, my business value went down from last month to this month. Why? And so that's something that there's really good resources out there on how to calculate SDE. This would likely be something that your bookkeeper would not do or would do for an additional fee. However, I think it's really, really important to do.
So give us the definition for that. Seller's discretionary income.
Yes. So I've got it pulled up right here. And let me I'll share with you how we calculated at our company. So this is going to be, we're going to start with net income, which is going to be the bottom of your P&L. And then here are the adjustments that I will make when I'm calculating this. So interest expense, we have a holding company, so I add back management fees. Any intercompany, if you have your kids on payroll or your wife on payroll, if they're working in the business, but if I think a good thing to ask is if this were to change hands, would this still be incurred? Software expenses are something that can be added back. Any one-time items. So if you get sued or you hire a contractor for a one-time project, that would be a one-time expense. Owner health insurance and owner's compensation. So that gets you to seller's discretionary earnings. And when you have that, you add up the last 12 months, and that will get you your trailing 12-month SDE. And that is what you can do. You can multiply that by, I would say, I always multiply it by 3 because it's just helpful. That number is, you can go back and forth on multiples. What multiple is my company worth? You can figure that out when you go to sell. I always like to guess on the low side here to be conservative. But you would multiply that by 3. That's what I do. And then I add back my inventory. And that's an approximation for what your business is worth. And I'm not as concerned about the number. I'm concerned about the movement of that number. Is it going up or down? What things am I doing in my business to make it worth more? What things am I doing in my business that make it worth less? And, when you're a business owner, there's 2 types of compensation. There's the cash flow that you get from paying yourself on a regular basis. But a huge chunk of the value that you're building is what that asset's worth at sale. And that's something that when you're in the trenches or you're growing very quickly, which is a good problem to have, uh, I find to be an incredibly helpful metric to look at on a monthly basis.
I mean, this is so key because it takes all the clutter out. Because what you are describing is, first of all, okay, let's go back. Start from the beginning. Your net income. In order to calculate your seller's discretionary earnings, you have to be able to start with an accurate net income calculation in the first place.
Mhm.
And a lot of the times that's not the case. So
Yeah.
you're starting right from the beginning with a contaminated number, right?
Yeah. I think that goes back to one of my earlier points is get bank reconciled financial statements. It's just something that is there's all types of services out there. We do ours internally. However, there's all types of services out there, and it's something that's critically important to your business. And if you're going to spend time to do analysis, make sure you're doing analysis on solid numbers, numbers that can reconcile back to a bank statement. And so this is something that before you worry about SDE, make sure you have solid financial statements. And when you're talking bank reconciled financial statements is what you would be asking for. And there's a lot of firms out there that do it. There's a lot that specialize in servicing Amazon sellers. And I think that that is critically important. So,
Yeah.
yeah.
Well, I mean, it all starts with being able to take that settlement report that comes out every other week with, if you are doing really well, it's hundreds and hundreds of line items. Of course, for each order, there are several line items, and then there's all the what we call the everything else. And when you add them together, and with their reserves and reimbursements and clawbacks and the clawback fees and put it all together to be able to say, okay, we sold so much and we paid so much in expenses and commissions and everything else, and this is what's left. That's already a huge task because it will call for serious analysis. There are tools out there that one of them that I like very much is A2X accounting, and they automate the whole thing. They plug into your Seller Central and then pull it out, and then they just render an invoice as if
Mhm.
you're selling to Amazon, averaging the price for every year because you may be selling at different price points. So that will help that, but that's not the end because then comes the next challenge, and that's the inventory accounting, right? So how do you manage that? That's you need to have the systems and the configuration that will help you do that, right?
Yeah, absolutely. So we use a spreadsheet or Google Doc that anytime that we reorder from a factory, we would put the unit cost. And what we do separately is we will look at freight per unit. So on our financial statements, freight is one line item, and cost of goods sold is only going to include the unit cost of our item. And so as those are updated, we update our spreadsheet. And I like to look at, and let's just use an easy example. You buy 100 units and your shipping charge is $100. So your shipping cost is $1 per unit. And say you buy those units from your supplier for $5 a unit. That $5 unit cost plus $1 shipping cost makes $6. And that's what I call fully loaded cost of goods sold. And so I use a tool on Helium 10 called Profits. When I'm entering in uh, to Profits, I like to use the fully loaded cost because it's good to know how much that shipping cost is or how much the unit cost is, but you have to ship it. And forgetting about that cost is critically important. And so when I'm doing analysis on profit, which why don't we get into that? I am always looking at fully loaded cost.